all, I welcome you back to Caroline's Online Academy. In this series of videos, what we are doing is we are learning small concepts associated with accounting for share capital. And learning all of these concepts one after the other will, in the end, help us solve all the big problems that are asked in the board exams as 6-mark questions. In the previous video, we saw how to account for calls in advance, right? Now, in this question, we're also in this video also we're going to be looking at calls in advance. But there are two people who paid the money in advance. In the previous question, we had just one person paying the money in advance, and this we have two people paying the money in advance, and we'll see how to account for it. It's not complicated; it's as very simple, just like the previous question. Let's go ahead and solve. Read the question first. Indresh Limited issued 1 lakh shares of ₹100 each, payable as follows. On application, you receive 25, on allotment 30, and on first call it's 30. So what would be second call is remaining, and how much would that be? The issue price of the shares are 100, and we have received 30 on allotment, 25 on application, and 30 on first call. So we received 85. So on second call it will be 15 rupees. One shareholder, Karthi, holding 1,000 shares, paid the remaining amount due on his shares along with allotment money. So Karthi has paid the remaining amount due on his shares along with allotment money, whereas another shareholder, Manat, paid the remaining amount due on her 2,000 shares along with first call. So Manat has also paid advance, but she has paid it along with the first call, unlike Karthi, who paid it along with allotment money. So now we have Karthi, who has paid advance amount along with allotment money, and Manath, who has paid advance amount along with first call. Let's go ahead and solve this one. The first journal entry, as you all already know very well by now, we have solved so many questions, so you must be knowing it, is receiving the application money, and the journal entry for receiving application money is bank account debit to share application account. Application money received. And the amount, my dear children, here is we received 1 lakh applications, right? So the number of applications multiplied by the application money per share. So that's 1 lakh into 25, which is 25 lakhs. The second journal entry is allotting shares. So that is an event which has two journal transactions. First is to transfer the application money to share capital account. So that will be share application account debit to share capital account. Shares allotted. As there is no rejection, the entire application money received shall be transferred. And the third journal entry would be to make the allotment money due. Now, Karthi has paid the remaining amount due along with allotment. Does that mean that we make some changes here? No. We would come to know that Karthi has paid the remaining amount due along with allotment money only when we receive that money. As of now, we are only making the allotment money due. So what will we make the allotment money due for? We'll make the allotment money due for the amount of shares allotted multiplied by the allotment money collectible per share. In this question, if you see, the allotment money collectible per share is 30 rupees. Am I right? The number of shares allotted is 1 lakh. And the journal entry, as we've already discussed in the previous videos, is share allotment account debit to share capital account. As there is no premium involved, premium won't be credited. Allotment money made due. So that will be made for due for 1 lakh into 30. Number of shares allotted into allotment money per share. Now after this, we got to receive the allotment money. Now this is where the problem actually arises. This is when Karthi has paid the amount in advance. He has paid the remaining amount due in advance. Am I right or not, my dear children? So what would be the remaining amount due? If you see, Karthi has paid the remaining amount due as advance along with allotment money. So the remaining amount due would be the 30 rupees on first call and second call. Amount of 15 rupees. 45 rupees is what he would have paid in addition to what he's supposed to pay along with allotment, because that is the remaining amount only he's paying as advance. So advance amount is 45 per share. Now the journal entry would be bank account debited because we are receiving allotment money, and share allotment account will be credited as that asset is reducing, and calls in advance account will be credited. As stated earlier in the previous video, calls in advance is a liability for the company as it has received money before it has actually become due. Understood or not, my dear children? So allotment money received will always credit the call account with the amount that we made due. So 30 lakhs will be fully credited. Now, what is the calls in advance, my dear children? Karthi has paid the remaining amount due on his 1,000 shares. On the 1,000 shares held by him, he has paid the remaining amount due. The 1,000 shares on the 1,000 shares held by him, he has paid the remaining amount. That is the first call and second call along with allotment. So that is what he is paid in advance. First call is 30 rupees. Second call is 15 rupees. So totally 45 rupees he is paid in advance along with allotment money for each share. And he has 1,000 shares. So totally he is paid 45,000 in advance. So the total amount of money received by the company would be 30 lakh plus 45,000, which is 30 lakh 45,000. All right, then we got to go ahead and make the first call due. Now, when we are making the first call due, the fact that Kati has paid the certain advance would not make any difference. We'll still make the first call due for the entire amount of first call due on all the shares allotted by us. So, share first call account debit to share capital account, share first call made due. On the 1 lakh shares, 30 rupees per share will be made due. Even if he has paid advance, the making due entry will not change in any way. Understood or not, my dear children? And then we got to receive the first call money. The journal entry for receiving first call money is bank account debit. Now, there is a problem here. The problem is that Karti's calls in advance is already there. So we will not receive any money from him because he's already paid the first call money also along with allotment money. So we'll have to debit calls in advance here as that liability of the company is reducing, we'll be debiting it. And Manath also is paying calls in advance. If you look at the question, Manath is paying calls in advance along with first call. So Manath is also paying calls in advance. Am I right or not, my dear children? And that is happening in first call. So if you do it exactly like how we have learned, calls in advance of Karthi will be debited because we are making use of it to set off against the first call dues of Karthi. So that will be calls in advance account debit, and share first call as usual will be credited because we are receiving share first call money. And calls in advance of Manath has to be credited. Am I right or not, my dear children? So there was a question like this earlier in the board exam. I've solved all the previous year board exam questions also in another playlist. You can go ahead and check it out. There was a question like this. And what they had done in the solution is here they have written calls in advance Karthi and debited it. And here they have written calls in advance Manath to signify the fact that calls in advance of Manath has been credited and calls in advance of Karthi has been debited, because calls in advance cannot be debited and credited in the same account. Am I right or not, my dear children? And they are also given an alternate journal entry in a situation like this. What we can do is we'll not consider calls in advance of Manath at this point. Okay, we'll pass a separate journal entry for calls in advance of Manath. So the journal entry here would be share first call money received. We'll just account for the first call money we received. We'll credit share first call with the entire amount that we made due. And calls in advance of Karthi is 1,000 shares into 30 rupees per share was first call. That is what we'll make use of. We'll not make use of the entire 45,000 we credited to calls in advance, because out of the 45,000 rupees, Karthi's first call amount of 30,000 is there, plus final call amount of 15,000 is there. That 15,000 can be set off against final call only. It cannot be set off against the first call. Understood? Right now, we are receiving first call money and setting off Karti's first call amount. So we can only set off 30,000. of the first call of the 45,000 that Karthi paid in advance. Only 30,000 can be set off here, and the remaining amount has been received from all the other shareholders. So that will be 29 lakhs 70,000. Apart from that, Manath also paid the remaining amount due on her shares, right? That also we got to account. It's a liability for us, and she has paid us money, so bank account will be debited. So bank account debit to as a liability is increasing, calls in advance, we'll credit it. Calls in advance account credit. Manath's calls in advance. Now, how much would she have paid in advance? She had paid the remaining amount due along with first call. So, what is remaining after first call? Second call. So, second call, the 15 rupees per share is due. That she has paid along with first call. So, she's paid 15 rupees per share as advance, and the total number of shares held by Manath is 2,000. So, 15 into 2,000 is how much, my dear children? It's 30,000. That's what she has paid. And the next thing that we got to do is make the second call due. And the journal entry to make second call due is what, my dear children? Share second call account debit to share capital account. Share second call made due. And we'll make it due for the 1 lakh shares, irrespective of whether there is calls in advance or not. So 1 lakh into 15, 15 lakhs. 15 lakhs is the second call amount, as we already found out. Now we got to receive the second call money. We already know that Karthi and Manath won't be paying us because they paid the first call already, for second call already. So calls in advance account, we are making use of the calls in advance of Karthi and Manath, so that will be debited. The liability is decreasing, therefore it will be debited to share second call account. Share second call money received. All right, so the amount that will credit share second call is 15 lakh. And the calls in advance that we going to make use of is 1,000 shares of Karthi into the 15 rupees of his in advance, and 2,000 shares of Manath into the 15 rupees of hers in advance. So that will be totally 3,000 into 15, which is 45,000, and the amount received will be 15 lakh minus 45,000, which is 14 lakh 55,000. And that is how we account for calls in advance when there are more than one shareholder, paying calls in advance. With that, we've come to the end of this video, my dear children. In the next video, we'll look at the next concept. And until then, see you people. Please do like, share, and comment below the video about how you feel about the content that we're providing in Caroline's Online Academy. Hopefully, we'll be able to provide you with all the concepts in all the chapters in the upcoming days. And your like or your comment will greatly encourage us to do more. Okay? Thank you so much. You people take care. And if you haven't subscribed to the channel yet, please do subscribe. See you in the next video. Have fun.